Yeah. So there's one thing very unusual about the stock market, which does not exist in other markets. The stock markets are auction driven. It's buyers and sellers coming together in a marketplace and setting prices. Auction driven markets have a very specific peculiarity. They get depressed at times and they get euphoric at times. And if I just, randomly throw a dart at any stock listed on the Bombay Stock Exchange, and I look at the 52-week range on that, it will be like 60 to 130 or 100 to 250. Just any stock, even if you look at Reliance or any blue chip stock, you'll see a pretty wide range between the 52-week low and the 52-week high. Now, let's say I have a broker friend of mine, a real estate broker friend of mine, and I own an apartment in Mumbai, okay, in Khar. And I tell my broker friend, listen, I'm going to call you sometimes. Just tell me what my flat is worth. So he said, yeah, sure, no problem. So you call him on January 1st. He said, kitna daam hai? What's my flat worth? He says, your flat is worth 6 crores. You're feeling really good. I said, okay, thank you. Then you call him the next day. What's my flat worth? He said, it's worth 6 crores. Then you call him the third day. He says, listen, idiot, it's still worth 6 crores. Okay. And because he's your friend, he tolerates you. He tolerates every day this stupid call you make to him. And every day just write down the price he gives you. Finally, after 30 days, he tells you, oh, thoda, there's some movement. It is 6.1 crores. Okay. So you write down the 6.1. You keep calling him. When you do the whole analysis for the whole year, price of your flat has varied between 6 and 7 crores for the whole year at the most. Okay. It has not gone to 3 crores to 9 crores. But if that flat was a listed company, sitting inside a listed company, it would be between 3 and 9 crores. So just taking the same asset and converting it into pieces of paper and shares and all that causes this attenuation. So when we look at non-auction driven markets or non-auction driven assets, so let's say, for example, I'm a private equity investor. I'm buying and selling whole businesses. What's going to happen is I'm going to be facing an intelligent seller. So it's an intelligent buyer facing an intelligent seller. Unless there are like crazy things like COVID or something going on, you will end up with an intelligent price. Otherwise, there'll be no deal. So when you have an intelligent buyer, now, when I was looking at this company in Turkey, which was 16 million market cap, and I told the owners of the business, I'll give you 25 million. Please give me the whole business. They would have just laughed me out of their office. Okay. But in the market, it's available. The whole business cannot be bought for 25 million, but 10%, 20%, 30% can be bought at that price. Okay. So the only time I have looked at doing something other than auction driven markets, because I think this particular nuance of publicly traded stock exchanges, all of that gives us a way to invest, which is not available in all other asset classes. Okay. It's not available in gold. It's not available in buying whole businesses. The one time I used this knowledge for other purposes was in the 90s when I was investing in tech. I used to notice that some software companies were trading at very high multiples. Like I knew they were growing a lot, but the trailing PE was more than 100. So the company is growing 30, 40%. Maybe it's undervalued, possible. Okay, but I can't bring myself to pay 100 times trailing earnings. But what I took that as a signal to mean is that it has high growth. So what I did is, like, there was a company called PeopleSoft, HR software. It required a lot of customization to implement in Fortune 500 companies. I decided I will set up a PeopleSoft practice only because I saw that the valuation is so high. Now, I don't even know how to spell PeopleSoft. So to do a PeopleSoft practice, I need to have a practice leader. And a practice leader at that time would cost like 250,000, 300,000. So I decided in my business, I'll take a chance. I said 300,000, we can take a bet. If it doesn't go, we'll see. So I placed an ad for a PeopleSoft practice leader. And within a few days, I got connected to a guy and he looked exceptional, great guy, Paul Yates. And Paul Yates basically, we gave him like a 250,000 base salary and some upside, whatever. And he was going to start in 2 weeks. Okay. Now, when he starts with my company, I have no business in PeopleSoft. On day one, it's going to be burning 20, 25,000 a month. So 1 week before he starts, Paul Yates calls me and says, the client where I'm working is asking if my new employer will give me to them on a consulting basis to continue working on it. So I said, Paul, what would they be paying? He said, they'll be paying about $3,000 a day. Okay. So I said, Paul, tell them yes. Okay. So now Paul has not started with me. Okay. Every month the billing is going to be 60,000. Okay. And in a year it'll be 700,000. Like expenses 300,000. So I said, PeopleSoft, what stock I saw is already giving me more than, I mean, if I look at the actual amount invested in the PeopleSoft practice, it was like $1,000 for an ad. Okay. I've only invested $1,000, which I will make back on the first day that he starts working. Okay. And his payroll will be paid later. You know, I'm not even paying the payroll till like he's worked. In the meantime, I already billed the client, collected. Then after a week, Paul calls me again. He says, the client wants me to manage a team of about a dozen developers. And he's asking me if we can provide the team, okay, of 12 PeopleSoft developers. So I said, Paul, do you know PeopleSoft developers? He said, I'm the president of the user group in Chicago. So I said, do you know? He said, yeah, I know a dozen guys who I can bring. So I said, what will they be paying for each of these guys? He said, about $2,000 a day each. I said, tell them yes. Okay. So we hired these dozen people for 100, 150,000 each. And they all came to work too. So what I realized is that better than investing in the stock market is just look at the highest PE software company, which needs services, and start that service practice because it's telling you the growth is very high. And then I started doing that. So then we set up a business objects practice. Okay. And so suddenly the IT business is on steroids. Okay, because of this stuff. So that's the only time when I took data from an auction-driven market. And I didn't invest in those companies, but we made more by not investing. So that was the only time when I kind of used it in a weird way. But I would say that, you know, one of the things about life is that you want to specialize. You want to be an inch wide and a mile deep. Okay. So we have a mousetrap. We have auction-driven markets. We don't need to go hunting in other less favorable pastures.